My topic is capture the Elliott wave trends and achieve consistency in your trading without risking your capital. For those of you who don't know me, I'm Jody Samuels, and I started trading currencies on Wall Street in the early 80s for JP Morgan, a major US investment bank. In fact, I traded the British pound from 240 down to 105 and back up to 150. What a roller coaster ride that was. Today, I'm an independent trader and trading coach at FX Trader's Edge, trading stocks and options, Forex, and cryptos with our Elliott Wave based system called the Wavy Tunnel Pro, which I will share with you during my presentation. So let's get started. Today, we're going to learn how to locate and trade with confidence end of trend trades using a simple tool. We're going to get out near the top when others are buying, train our brain to do that, and get in when others are selling. We've got to train our brain and practice to do this. We're going to find trades with our new Elite Scanner tool. And then I'm going to show you how you can join the Wavy Tunnel Pro and get funded. We'll talk about getting funded in the end, but I think it's really important to have a funded account so that you can make money on somebody else's dime. It's really fantastic to be able to do that. So we offer that. This is me, and I wrote the book, The Trader's Pendulum. It's quite old right now. It's 2000. It was published at the end of 2015, but it still applies. And when we talk about the Trader's Pendulum, we talk about the market, the financial, and the emotional pendulum swings. And the market pendulum is what we're going to discuss today. And we know, especially with Elliott wave analysis, that the market doesn't move straight up. So it moves up in trend and then it corrects. And we use Fibonacci for the corrections to see how far it's going to pull back. And the financial pendulum is about making and losing money. We can't only have successful trades. So it's important to be balanced and to understand our trading system so that we don't get too emotional. Emotions really kick in when we're trading, as we all know. So we try to be balanced as traders. Let's get to it. What process do I follow to find trades, have the confidence to pull the trigger, and manage my trades with clarity? For me, it's a 3-step process in my system. And the first is the analysis. Which is Elliott wave analysis. When I was at the bank, we hired an analyst from the Chicago Board of Trade, and he's now very, very entrenched in his analysis in the institutional market. But I always had an analyst by my side, so to speak, and that's the Elliott wave analyst. So I don't consider myself a consummate Elliott wave counter, which is why I developed the Wavy Tunnel Pro strategy to be able to count the waves without really counting the waves. But the analysis is key. So do I look at market analysis, Elliott wave counts? Absolutely, because that gives me the market map. And I'm going to show you the market map in just a minute. It gives me the big picture view. And then I know what I need to do with step 2, my strategy, which is the Wavy Tunnel Pro and the tool that we developed. And I'm going to show you that during this presentation, even though I know you don't have the tool, but I'm going to show you how I use it and how I trade using the Wavy Tunnel as we look at live markets. And then finally, step 3 is trade management using optimal risk reward. This is really key because this can make the difference between a winning trader and a losing trader. Could you imagine if you manage the trade well and you follow your risk parameters, you can be ahead. But if you risk more than you should on any one trade and you lose, well, then you've set yourself back. So this is really, really key. We'll talk a little bit more about that, but not too much. Just a few trading tips before we start looking at the markets. Being organized can help take your trading to the next level. And when I'm giving you these tips, I'm really speaking to myself. In fact, in this presentation, I'm really speaking to myself. Do you have a checklist for high probability trades? Do you have a way for you to take your trades, or do you just wing it? Once in a trade, do you manage it well? Do you have your stop loss? Do you have your profit targets? Do you know what you're getting into before you get into the trade? Do you take your losses and move on, or do you add to losing positions? Now, this is all about the emotions, because if we get into fear and greed mode, well, if we get into greed mode, then we don't take our losses and move on. We don't take our losses at all, and we end up having a bigger losing position. And sometimes we add to the position when it's going against us. And there's nothing wrong with adding to the position if that's your strategy. You might want to take part of your position at a level and then part of your position at another level. But when you do that, believe me, you need to plan it in advance. Otherwise, you're just going to get out of your position when it goes against you. Do you keep track of your trades? And do you look at your trades at the end of every week, or at the end of every day if you're a day trader, or at the end of every month if you're a position taker? Do you learn from your mistakes, or do you do the same things over and over expecting different results? So the analysis, the first step in achieving consistency is to have a thorough knowledge of the market to determine possible future scenarios and be prepared to take advantage of opportunities that arise. And that's where the wave counts come in. In our system, we use the market map in order to provide market context and increase the likelihood of successful outcomes. Ralph Nelson Elliott, he studied various market indices over a 75-year period in the 1930s. He was actually bedridden with an illness, and when he discovered that stock markets traded in repetitive cycles, because he pored over thousands of stock market charts. And what he discovered was that these cycles or waves reflected the emotions of investors. So we're going to talk about the emotions of the wave count. Now, Leonardo Fibonacci was an Italian mathematician born in the 12th century, and he discovered the Fibonacci sequence of numbers, which you can see in blue on the screen. A sequence of numbers after 0 and 1, where each successive number is the sum of the two previous numbers. Now, this Fibonacci sequence is how we get our retracement ratios and how we get our extension ratios and expansion ratios. This Fibonacci sequence of numbers is really key, and it's used in Elliott wave analysis, and we're going to see later on in harmonics. So this is the market map that I'm talking about. It's the 8-wave market cycle. And notice where I have the red arrows. Now, this is a perfect 8-wave market cycle. Now, you know that the markets aren't ideal all the time, and they're not perfect all the time. But when they are, and that's what I look for, ideal setups, and I'm going to show you some ideal setups with the wavy tunnel, that's when I get interested. When the market is muddled, when I don't understand the wave count, I need to stay out of it. But these red arrows indicate pivot points, swing highs and lows. So swing highs and lows. And this 8-wave market cycle is very telling. You notice that at the end of every swing move, like at the end of wave 1, 2, 3, 4, 5, we see head and shoulders patterns or reverse head and shoulder patterns. So classical technical analysis is very much ingrained in Elliott wave analysis. You can see the same patterns at the end of swing moves. So this is the 8-wave market cycle, and these numbers here represent also these are numbers from the Fibonacci sequence, and this tells you how many swing moves there are depending on which time frame you're on. So I'm not going to go into the details of this, but you're going to have more swing moves on the smaller time frames. So we're going to talk more about this, but this is how I've represented the 8-wave market cycle. This is what I call the market map. Now, up here is when traders tend to load up. And I'm giving you this primer just because it'll help when we go through the live market examples. So up here, traders get very optimistic and exuberant. They load up. You have FOMO, fear of missing out. Greed sets in. And then down here, when we should be buying, fear sets in and we bail, panic and discouragement. And we have seen this pattern in every single stock. really in really every single stock in the last few months. I'm going to show you this pattern. So up here is when we need to be taking profits or sell. Down here is when we need to be buying. Now notice something else. When we have an Elliott wave count, the Elliott wave count typically falls within channel lines. We're going to look at a bunch of things, ETFs and currencies in just a minute, where we start with the quick and dirty method of looking at the trends within channel lines. So you can even put channels around the corrective moves. Getting back to fear and greed, Warren Buffett says, be fearful when others are greedy, be greedy when others are fearful. So that means up here, we want to take a contrarian view. Down here, we want to take a contrarian view. It's not easy to do. I have worked on it my entire trading life to take a contrarian view and not get caught up in the hoopla, in the frenzy of market buying. Now, that doesn't mean that you can't buy during a wave 3 when we're in a wave 3, but we have some clues as to when the trend is running out, and we have to just be patient and wait for the market to settle down. So on the left, we have the 8-wave market cycle. And on the right, we have the wavy tunnel. So these are moving averages. And you see how closely this mimics the 8-wave market cycle. We have the trend move up, and then we have the correction down. So at the end of the trend, you want to look for divergence. I use the awesome oscillator, and when I see that we have divergence in the awesome oscillator, where price makes a new high and the awesome oscillator makes a lower high, that's telling me that the market is running out of steam. Then the market comes down for an A, moves back up, and this is usually the B bull trap, where people think that the market is going to go higher. But with this wavy tunnel, when we break down below the wave, this is the wave, we're going to the tunnel in 9 cases out of 10. So this is one of our trades. I'm going to show you one of the trades. Our trades are the breakout 1, the breakout 2, which is down here once the market starts to move up in a trend. So trade number 1 might be to buy the wave 3 with a stop below 0.0 or wave 2. And you can also wait until we take out the top of the wave 1. You can also buy the wave 3, go down to the smaller time frame and buy it whenever it comes back, whenever you see some red candles or moving back into the moving averages. So the wave 3 is usually the strongest move when we're in a trend move. You don't want to miss that one. Trade number 2 is what we call our breakout 4 trade for buying the wave 5. So this is when, if we are in a very steep trend and we come all the way back down to the moving averages, this is the wave, then there's a good chance that the market is going to stop here and continue up for the wave 5. Now, we could have a complex wave 4 correction, that's for sure. But there's another breakout 4 trade, which is over here after we've done the 5-wave sequence and we have a very steep ABC move down into the tunnel. This is also our breakout 4 trade. And this is what I'm going to focus on today with stocks. So the end of the wave C. Then trade number 3 is about the PW fill the gap trade. So the PW is the price to the wave, price comes back to the wave, and at this point we can go up and make a new high, or we can go up, not make a new high, and this would be our B wave, and then we look to sell the C wave, and confirmation might be when we go below the wave. That's how we do it in the Wavy Tunnel Pro program. Now let's just go back to the 8-wave market cycle here, and I said that you can draw channel lines around the trend moves, just as I've done here. And we're going to start with a quick and dirty method. We're going to start, I have ETFs, and we're just going to go through them just to learn a little bit, and then we're going to build on this and look at Forex and some stocks as well. Notice right here, we have the SPY. So we are in a channel. Okay, we're in a channel. Now notice what happens every time we come down, like here, to the bottom side of the channel, the market moves up. So as long as we stay within the channel, we're good for a bullish move. This is the QQQs, the NASDAQ. Now notice how the QQQs is off the channel base. So it had been stronger over the last few days. This is the daily chart. Now we have the TLT. So the long bond is breaking down again. Okay, so we had a nice bullish rally, and here the market was again thinking that we're going to buy. We didn't quite make it up to the top of the channel. We're breaking down. So watch these levels. Watch these levels very carefully. Now this is the consumer discretionary XLY. So we are in a nice uptrend here. Technology. So you can see technology is sort of leading the way recently. So we're in an uptrend here. The financials doing okay as well. So you want to be, if you're trading ETFs, you want to look at this and try to buy when we come back down to the channel line. These are bullish patterns, but when we look at here, XLP, consumer staples, this is a nice trend up, and this is a corrective move. Is it not? It's a corrective move. So you can trade long in the corrective move, but you need to definitely make sure that you're buying on the supporting channel line. You don't want to be buying up here until we break through. Okay, same thing with XLU, utilities. It's lagging, right? And the same thing with healthcare. It's lagging. So this is just a quick and dirty way to use channel lines, knowing that Elliott wave counts fall within channel lines, whether it's corrective or trend. Notice I'm not giving you the wave count.
I took that screenshot 9 trading days ago. This is an update. Look what happened. In discussing the SPY, we broke down through that supporting trend line for the last 9 days. And only today do we have a really serious engulfing candle. So now what we can do is we can draw a channel around this correction, because this looks like, in classical technical analysis, a bull flag. So if we draw channel lines here, we are going to be following a break higher once we break through the resisting trend line for a continuation of the trend. Same thing with the QQQs. We broke down through the supporting trend line. Same thing with TLT, although we did have a clue that TLT was breaking down when we took the screenshot 9 days ago, and then it just continued its merry way. Consumer discretionary broke down through the supporting trend line, and we have a reversal candle today. Technology broke down through the supporting trend line with a reversal candlestick today. Financials, same story, only with this we broke down and we retested. We actually retested on the technology ETF as well. Consumer staples has been trading within this down channel corrective pattern, and we haven't broken down, or we haven't broken out of it. So I would watch this one. I would extend this channel and see if we actually break out to the upside. XLU utilities, not a very nice pattern. We broke down further. And healthcare, same story. We broke down further. So here's a little update today, which is March 2nd.
Now we get into the US dollar index. So we had a very strong downtrend that has reversed. Now gold, we were in a very strong uptrend, and look what happened. We were butting up against the top end of the channel, and people were talking about gold moving much higher. And then we had the first impulse down and then a nice sideways move. And I love to look for 3-wave moves in Elliott wave analysis. So we had the first move down, we had the sideways, and here I was speaking to somebody, and they said, "What do you think about gold?" And I said, "Well, it looks like it's going lower." And that's because we not only did we break through the channel line, but we had a nice impulsive move down, a sideways price action, and I was looking for a move of equality, an ABC. move lower for gold. Now, how far down it goes, that's where Fibonacci comes in, and that's where we have to do a lot more analysis. Bitcoin futures, this is the futures. We're in an uptrend, okay? Industrials, XLI, this kind of looks like an ending diagonal to me. I mean, it can break higher, but my bet is that it's going to at least come back and retest this. And if we break down, we break down. XLE energy, also sort of this is a corrective pattern. So it looks like a flag. So we need to break through the top channel line for it to move higher. And I'd be buying on a dip. Here is XLB materials. This is also a sideways move, a weak uptrend, so we could come down.
Let's skip ahead 9 days and have a look at the last 9 trading days. When we looked at the US dollar index, we had broken through this downtrend channel line and we have continued to strengthen. The dollar has continued to strengthen. Gold broke down through the supporting channel line and continued to go lower, and over the last 2 days we have seen some interest to buy, so reversal candlesticks. Bitcoin is holding nicely within this uptrend channel. Industrials is holding nicely within this channels. Came down close to the supporting channel line, bounced right off of it. XLE energy has been confined to this sideways channel. Came straight down almost to the lower supporting channel line, bounced right off of it. Same thing with materials. XLB bounced right off of the supporting channel line and is probably going up now to test the higher channel line. Yeah, we should take a look in another week or two. I'm sure we will see some price action outside of these channels for these ETFs.
Now let's get to some of the currencies. The euro, what we saw with the dollar index broke higher, so that's the opposite of the euro. The euro broke down. The pound is sideways, very sideways, and the dollar yen broke out through the channel line. So this is just a quick and dirty way. The dollar Canada, I'm in Canada. I don't get excited about buying dollar Canada up here in the 130s, but this is a flag formation. If I'm going to trade it, I'm going to trade the range until we break out of the range. The Aussie, we're at the lower end of the channel. We could break down, or we could pause here and start to move higher. And the New Zealand dollar is trading sideways.
Yes, you guessed it. We're fast forwarding 9 days to see the price action over the last 9 days. Well, the euro, true to form, it continued its merry way down just as the dollar continued moving higher, and the pound is sideways. Dollar yen has been continuing to rally, so dollar higher, yen weaker bodes well for pound yen, buying the pound yen. That's what's been going on here. Dollar Canada broke out of its downtrend channel. The Aussie dollar broke down through its supporting channel line, and the New Zealand dollar traded sideways. So this was prime time for selling the Aussie Kiwi cross, selling the Aussie Kiwi, and I know that that's what's been going on as well. Let's move on.
So now I just want to add another layer. This is what we have with our Wavy Tunnel Pro, and I've got to move faster, so I'm going to go, maybe I'll skip a few slides here, but this is the euro, and we have swing move, like the semaphores represent the end of swing moves, and the purple arrows are the biggest swing moves. So when we see this lower purple down here, and then we see blue, 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 every time you have a blue, you have a matching opposite blue. So in our system, our students look for, like here we have a matching red, so this would be a nice time to buy. Why? Because price isn't stretched. We've come back down to the moving average, the wave. We have confirmation with this red, and then we move up and we have the purple arrow. So this is our first indication that okay, maybe we are running out of steam. We also have divergence in the awesome oscillator. So this is just putting like a personality to the charts with just channel lines, which is fine, but I like to see this as well. Now, in dollar Canada, this is interesting because doesn't this look like the wavy tunnel setup with the strong move up for the end of the wave 5 and then a nice ABC correction? Well, this gray arrow here shows that this is our breakout 4 setup, actually. You also see some automatic trend lines here that our software just puts out. And we could trade higher from here. When I see this, we could trade higher. And if we break down below it, then, we go lower. I'll just say that it's really great to have a system where you have the purple arrows. Okay. And then here we have a trend line break. So you see the red arrow, it automatically produces a red arrow when we have a trend line break, but you get the trend lines in advance. So you're anticipating that. So that's good. And then here's the Aussie, same story. So we just looked at the Wavy Tunnel Pro setup. We looked at a quick and dirty method to just look at the markets, maybe to do a top-down approach. Now let's look at the Elite Scanner tool to see if we can learn anything from that. So the scanner tool saves time and effort. The 6 wavy tunnel setups that we discussed can be found on the scanner, but it's difficult to watch all the pairs unless you get alerted when there is a setup. And then you can go to the chart and take the trade if it meets your risk criteria. So let's just find a trade on the scanner that's setting up right now that you can follow and see. I ran the scanner on just to show you that we can run it on anything that the MT4 platform, soon to be MT5, has. So you can use any MT4 platform, and these are the stock indices and bonds. I happen to run it on the weekly, daily, 4-hour, and 1-hour, but you can certainly run it on the smaller time frames as well. So I'm not going to go into this right now because let's just move on. But I do have, I guess, a few examples here on the commodities. I ran the weekly, daily, 4-hour, and 1-hour, and I'm going to show you gold and I'm going to show you wheat because how did I pick these two to show? Well, on gold, if we look at this breakout 1 column, this is indicating that the purple arrow showed up on the H4, this candle, and on the H1, 6 candles go. So I was taking note of this. Whenever you see an asterisk, these are the trend line breaks. An asterisk means that the trend line was broken and the target was met. That's right. We have targets when the trend line breaks. But here we have 2 trend lines that broke, and the targets haven't been met yet. So let's look at gold. This is gold, and I've put the little chart down here in the lower left-hand corner. I'm looking at the weekly, the daily, the 4-hour, and the 1-hour. So if we look at the H4, we have a purple arrow. It just set up. So remember, we discussed the strong move down and then the sideways move and then another move down. Just because we have a purple arrow doesn't mean that it's not going to go lower. It can repaint, which is why we need confirmation. And that goes with an Elliott wave count as well. Like you can see an analyst give a wave count for gold, and we will see gold, at some point today. So what the Elliott wave analyst will say is we haven't yet completed the C wave, or we have completed the C wave, but we can go a little bit deeper, and they'll give you levels based on the Fibonacci levels for the wave C. So I'm saying the same thing. Like we could go, it's important to have the Elliott wave knowledge as well. So on this H1, we also have the purple arrow, but notice how sideways it is. And we also had the trend line break. This is the trend line break that happened. There are actually 2 trend line breaks here. The blue is over the magenta. And on the H1, we have 2 trend line breaks that haven't met their targets yet. So our targets are met when we And you'll know it when we see like a red semaphore or a yellow semaphore. So it's quite possible that we trade up a little higher into the wave and then we come down and make a new low. We need confirmation in order to say, okay, this is the end of a move down for gold. Now, as traders, we can take a trade and leave a stop right below the lows, but just know that we could go lower and then you might wait again for another entry. But this scanner is alerting me that we need to be following this because this could be close to the end of the move for gold. We also have divergence here on the 4-hour. We don't have divergence here on the 1-hour, so that's something that tells me that we could be just moving into this wave and then come down and make a new low. It's quite possible. And if we look up at the daily, part of me wants to say that we will come down to the tunnel, but I'm not sure, okay? Because this is a fill the gap trade. So if that's the case, then we will only go up to the wave and then come down. So that's sort of my view on gold. I'm not extremely bullish at this level. We could come lower. But the scanner alerted me to the end of this trend move. Now, if we look at wheat, this is also very interesting. Why was it interesting for me? Okay, a few things. If we look at the weekly, I have a 3 here. This is the breakout 4 trade, which I'm going to show you shortly. The breakout 4 is when we had the strong move up, we have the purple arrow, and then we have a gray arrow. You can't really see it. We also have a lot of trend line breaks kicking in here. Okay, now I noticed this a few weeks ago, and we had a few trend line breaks kicking in here, and that's what the red arrow is for. But we have the gray arrow, so this tells me that we could be potentially moving higher. We actually did move higher on the daily into the tunnel, which really is the first target. And let's see, what else do we see from the scanner? So that's from on the weekly perspective. And then we have, yeah, on the H4, we actually had a trend line break to the downside. So it really depends on what time frame you're trading, but the scanner can alert us to whatever trade you're interested in taking. And this is also a multi-time frame, which tells us whether we're bullish. And my definition of bullish is when the wave is above the tunnel, and when we see the gray dots, this is when we see the purple arrow, that's when the gray dots start. Okay, so you can also decide what you want to see. If you want to see the breakout 1 or you don't, or the breakout 4, you want to see the trend lines on your charts. If you want to see the targets for the trend line targets, you can decide what you want to do. And if you want to have pop-ups, play sound on alerts, you can decide what you want to do with this. Let's just look at a few currencies now. This is the currency scanner. I highlighted, again, I was looking for the breakout 1, the end of the trend moves here, the end of the trend moves here. So I think I'm going to show you an example with the New Zealand dollar. I have the daily, the 4-hour, and the 1-hour. So we have the purple arrow on the 1-hour and the 4-hour. So this is, again, something to look for, because on the daily, we didn't quite move down to the tunnel, which is what I like to see. So this tells me that, similar with what I was saying in gold, that we could have this trend line break on the hourly and trade up to the wave, and then we can come down again. And if we come down and don't make a new low and start to move up again, well, that's confirmation that maybe we aren't making a new low. But I don't see divergence here. I see divergence on the bigger time frames, but I don't see divergence on the hourly. So a buy at this arrow is just a very short-term trade initially into the wave. And here you have the multi-time frame analysis. You have the middle is the current time frame, the hourly, and the 4-hour is up above. and the 15-minute is below. So they're all showing the purple arrow, which is the end of the swing move. So that gives us a good move into an initial move into the wave. And then we have to take it from there. Who is drawing the trend lines? The trend lines are being drawn automatically. For newbies, I'm being asked, are there specific time frames we should be using? For newbies, you want to get a lot of practice in. So you want to practice on a demo account, and you want to be using the time frames that you're going to be trading, but you want to be practicing on a demo account. And all of the patterns show up on any time frame because the Elliott waves are fractal, meaning that the same patterns show up whether you're using the 1-minute chart, the 5-minute chart, the 15-minute, the hourly, the daily, the weekly, the quarterly. It doesn't matter. The patterns are the same. So as a newbie, if you want to get a lot of time screen in, then use the smaller time frames initially and then grow from there. So you want to know what moving averages I'm using? Sure. The filter is the 12 EMA. The wave is the 34 on the high, low, and the close. That's the wave. And the tunnel is the 144 and the 169. Again, this is customizable. You can, as a day trader, you can trade the 1-minute, the 5-minute, the 15-minute. Swing, I like to use 3 different time frames. For swing traders, hourly, 4-hour, daily. Position takers, you might look at the 4-hour, daily, weekly. And you can set up whatever you want on the scanner and define your trade plan and go. All right, now I want to move to stocks, TradeStation. So I want to show you trades that have set up from the scanner, and I want to teach you this breakout 4 trade. So when you have a strong trend up, and up here we have the purple arrow, point T, this is the end of the 5-wave sequence, and then we're in the correction. This is what I'm going to be focusing on right here to find stocks that are buyable. So our system doesn't tell us to buy here, doesn't tell us to buy here, doesn't tell us to buy here. It tells us to buy here. Focus on the breakout 4 trade after a big ABC correction, end of trend trade after a 5-wave sequence. Okay, so I'm focusing on the big ABC correction. I'm going to show you that. I'm going to be showing it to you on the weekly chart for the big picture, but naturally you can run the scanner for day trading on the smaller time frames. Okay, and I'll show you that as well. So this is what it looks like. This is what the pattern looks like. We have a nice trend moving higher. We could draw the channel lines. We're really moving up along the wave. We get the purple arrow, and then we have our price to wave, fill the gap trade, and we go lower. This is the higher time frame tunnel. We go lower, and then we get the gray arrow. This is the time to buy. Not here, not here, not here. This is the time to buy. Same story over here. Same story. We have the purple, the end of the trend, and then we have the nice move down for the correction. We get the gray arrow. So let's look at the scanner. We looked at the sectors. So when you're deciding what trade you want to take, you want to have a view of the sector ETF that I showed you first. So we noticed that some were in strong bullish trends and others were in sloppy bullish trends and others were in corrective moves. So let's now look at the ready and the signal. The ready is when we get the gray arrow. The ready is when we get the gray arrow, and these are weeks. The signal is when we go above the 12 EMA. That's our filter line. I arbitrarily did it this way. So, but you can scan for the ready and then, or you can scan for the signal. Now, I'm going to show you the top few examples and on the charts. So these are ideal scanner setups. That's what it does. It gives you the ideal market map. So the top one, NRG, we have the purple dot. Instead of the purple arrow, it's the purple dot on TradeStation. and then we have a nice A, B, C move down, and then we get the gray dot. So this is the first time the gray dot appears. And then the green arrow is when we get confirmation when price closes above the filter. Okay, so this is the ready and this is the signal. You don't have to wait for the signal. The daily, now I'd be looking for price to move up to the wave on the daily. And here's the 4-hour price already, not the wave, the tunnel. Price already moved up to the tunnel here. So we have to see, this is certainly due for a correction. So it's certainly due for a correction. We've had very strong move up into the wave on the weekly. It's due for a correction. So we would want to wait with that, but that's the first example. And then AIZ, assurance. So same thing. We have the purple dot and then we have the gray dot. This is when the ready showed. Now this is sideways price action. So you can express this in any number of ways. Through the options market, you can do some vertical, or you can buy the stock, or you can buy a call. But this is a sort of a sideways market. You can even see here on the daily that we're not very excited to go up to the tunnel. So this looks very corrective to me. And so let's see what happens. I wouldn't do anything right now. This is Apple. So everybody knows Apple. So we got the ready here on Apple, and we got the signal here at 140. Like that was the signal at 140. But this was the ready. Okay. Now Apple is bullish, and you can see that on the 4-hour, the wave has crossed the tunnel. But you want to watch this area here. You really want to buy on dips with anything in an uptrend. And here, if we came down, we moved up, there are two places where you can go. We can make a new high, or we can come down and continue this correction down into the wave, which would be buyable then. Here's another example. Like these examples are just showing up. They honestly, they've shown up on practically every stock, and sometimes it's hard to decide which stock positions to take. But I just want to show you the pattern. And not all patterns are the same. Like this is very choppy, but this is the first time the TradeStation this is said to buy. Okay. Let me see if I can find an example. I better hurry up now. Here's Tesla. Okay, everybody likes Tesla. Same story here. We got the gray, and then we had the gray was the ready, and then the signal. Very, very steep move up, and we actually made a new high up here. So Tesla is buyable on dips. Yeah. Okay. Let's move on. Here's Google. Google, very sideways market, but also we got the green dot to buy. Microsoft, same thing. Also, we got the gray dot. I said green dot, gray dot to buy. And then we had a nice steep correction. This is a very nice entry for Microsoft. Okay, let's just talk about Motive Wave. On Motive Wave, I scanned for, I didn't scan for the breakout 4 trade. I scanned for another trade, the Royal Noble. So this is the scan. And on Motive Wave, this is the bar size, the bar index. So, and then the score is excellent, but this has to do with when the trade presented. So I'm going to show you the trades which are just presenting now. So the Royal is the purple arrow. The Noble is the gray arrow. So when we have a Royal Noble, we have found that that's a very good trade for a move in the opposite direction. And how do we know this? Well, what we've discovered was that when we have a purple arrow and the wave crosses down below the tunnel, we're expecting a lower purple arrow. And when you get a gray in between, we're expecting a move down for the lower purple. It happens like maybe 80% of the time, maybe a little bit more. Now, I wouldn't sell right here. This is the 4-hour. I would definitely look at a smaller time frame and look at the 1, 2, 3 reversal to get in. This is one example, and you can take note for stock traders. Have a look yourself. Here is another setup for PSTG, Royal Noble Noble, and here is another setup, Royal Noble Noble. So this is a setup for a buy. This is a setup for a buy. And you can also decide, this is KO, you can also decide if you want to look, if you're like, have a look at the bigger time frames to see if you're bullish and bearish on the stock before you do this. But and then here's another buy. You get the blue arrow. Yeah. So one thing that I definitely recommend is that you use the 1, 2, 3 reversal on a smaller time frame to get into the trade. And you can also get in, we have 0.1, 0.2 on the retracement with a stop above the high. As long as we don't make a new high, this is definitely a good entry as well. And you can use the candlesticks, and you can use support and resistance, supply and demand, whatever it is. And of course, the wave count, this applies to the wave counts as well, getting into the trade once you have a wave count that you like. Okay, but I definitely recommend that. Now, there were some questions. Does the dot print on the weekly close? Yes, it does. It on the close, absolutely. If you want to hold the stock for a few months, this is perfect for you, because you want to look at the weeklies and you hold it for a few months. Like, that's the, that it's giving you the optimal time to buy. Okay. Does your software draw the Elliott wave counts on the chart? No, it doesn't. But we tell you how to read the counts just from the wavy tunnel setup. Let me just discuss briefly how to join the Wavy Tunnel Pro and get funded. The Wavy Tunnel Pro 2023 is like a master's training in understanding how the markets trade in cycles. Use our proprietary combination of cycle high and low indicators with momentum indicators to warn of market tops and bottoms. Learn how to track short-term and long-term trends with precision. Works with stocks, futures, ETFs, Forex, and cryptocurrencies. Works for day, swing, and position trading. Find precise entry points for option strategies. Embrace this suite of professional tools to trade like a pro.
The Wavy Tunnel Pro is a 5-day accelerated trading and mentorship program. The videos are all on the website. It's a self-directed program, and then you can join me for coaching. And it covers many, many different topics like Elliott wave analysis and Fibonacci. That's what it starts with. Then the Wavy Tunnel Pro is a standalone system. So even if you're not interested in counting waves, it doesn't matter. We will just teach you how to read the market cycles. And then we introduce harmonics. When we combine harmonics with the Wavy Tunnel Pro, we have really, really powerful setups. And 3 different methodologies are saying the same thing, that price is going to end at a certain level. So use the Elliott wave analysis combined with the harmonics with the Wavy Tunnel Pro, and you get really confident that price is going to turn around at a certain point, or there's going to be a trend continuation. The Wavy Tunnel Pro 2023 5-day accelerated trading and mentorship program with me is my flagship trading program, and you will learn my personal system to achieve consistent profits in any market, and you will have the scanner as your tool to find these trades.
The website is wavytunnelpro.com, but I have a significant discount today, so you just want to hold on for that. Let's just talk about getting funded. If you want to be a professional trader without risking your money, with this opportunity, we're inviting you to be a trader and not just someone who trades. This is for you if you're ready to learn a system that will help you consistently profit and will help you create a healthy mindset for trading. A funded program, with a funded program, you need a healthy mindset for trading. And these are the rules. First, you have to qualify by generating 10% profit. Your daily loss limit is 2%. Your max drawdown is 5%. And then once you get the live funding, you share in 75% of the profits. You must put a stop loss in, and you must flatten your positions for the weekend. So, and you can trade Forex, crypto, and all CFDs, including stocks from the MT4 platform. $25,000 account size is offered, but I'm offering 3 different programs today with different sizes of funding. So you're getting a lot in this package. You're getting a master's training in Elliott, Fibonacci, and harmonics wrapped up in the Wavy Tunnel Pro system. Proprietary combination of cycle high and low indicators with momentum indicators. Well, you got a sense of that today. We're going to have 12 live coaching sessions. You will have access to the student trade analysis sessions comprised of trade review and analysis. You'll get trade plans with exact entry and exit rules for all the trades that we discussed today. The PW fill the gap, the breakout 1, the breakout 2, the breakout 3, the breakout 4. You'll have lifetime access to all the training materials, exclusive Discord channel access. Basically, you'll have professional tools and education to trade stocks and options, futures, Forex, and cryptos with consistency. Bonus, you'll have 1 month access to scanners, wave counts, trade alerts, and trading rooms 4 times a week. And there are various renewal plans from $59 per month. And I'm going to do something that I haven't done before, once a month coaching office hours for 6 months. You're going to get that. So once a month, we're going to meet. We'll talk about your trade plans. We'll talk about your trading. You can use me in the office hours for whatever you want to talk about. And you'll get a $25,000 funded account. Really good value. I see that some of you are asking where you can get the, what platforms do we use? So the indicator suite and scanners are on MT4, TradeStation, and MotiveWave. I showed you that. And the indicator suite without the scanner is also on TradingView and Wealth Charts. So these are not the prices that I'm going to be offering you, but I have 3 packages: Starter, Pro, and Platinum. The Starter has $25,000 funding. The Pro has $50,000 funding, and the Platinum has $500,000 funding. Okay.
But the prices that I'm going to be offering the packages at are discounted. The discount code is 300 off, 300 capital O, capital F, capital F. This is good until Sunday, and you will get $300 off any of the 3 packages. So instead of $11.97, the starter is $8.97. The Pro is $16.97, and the Platinum with $500,000 in funding is $56.97. Good until Sunday. Please join me for the 2023 Accelerated Coaching Program. Training starts immediately. The website is wavytunnelpro.com to sign up. The discount code is good until Sunday, and the code is 300 off. If you have questions, please email me, Jody at fxtradersedge.com, or support@fxtradersedge.com. I hope you enjoyed this presentation, and I hope to see you on the inside. Thank you for listening.